brace yourself, because oil prices have crossed $100 per barrel and the entire financial system is feeling it. Currencies have reacted, commodities are repositioning, and equity markets have suddenly become a lot more nervous. And that's exactly the situation markets are waking up to this Monday morning. Currently, oil has surged above $110 a barrel as tensions in the Middle East escalate. The US dollar is strengthening, precious metals are under pressure, and tech-heavy equity indices are struggling to find stability. In other words, it's shaping up to be a very interesting start to this week. So before you place your next trade, watch this.
Why is fast trade execution a must? Because you're more likely to get the entry price you want and the exit price you want. Reliable, rapid, responsive. Join ATFX today and let's get you started.
Good morning, I'm Francois, your market analyst here at ATFX Africa, and welcome to your daily market brief, where we'll be breaking down Euro USD, silver, and the Nasdaq 100, three markets that are currently being driven by the same macro forces: rising energy prices, escalating geopolitical tension, and shifting expectations around global interest rates. And if there's one thing we have learned over the last few years, it's when oil spikes above $100, markets rarely stay quiet for long. So let's kick things off today with currencies. The euro is starting the week under significant pressure as the US dollar strengthened amid rising geopolitical tension and energy shocks. Recent reports have shown the euro falling to around 1.155, marking its lowest level in more than 3 months. The primary drivers behind this move is the escalating conflict in the Middle East, which has triggered a flight towards the US dollar as safe haven asset. Energy markets are also playing a role here, with oil prices surging above $100 per barrel. Concerns are rising about the potential inflationary impact on global economies. For the United States, the impact is somewhat cushioned because the country is a net energy exporter. But for Europe, the situation is more complicated. The Eurozone remains heavily dependent on energy imports, meaning higher oil prices can simultaneously increase inflationary pressure and threaten economic growth. That combination can weaken the euro relative to the dollar. Meanwhile, the European Central Bank Executive Board members have warned that policymakers cannot afford to become complacent about inflation, especially if energy prices shock persists. So, in simple terms, the Euro USD narrative right now is being shaped more by energy markets and geopolitical risk than traditional economic data. Having a look at the charts from a technical perspective, Euro USD is currently trading near 1.155, reflecting the stronger dollar environment. Support is currently sitting at 1.147, which remains an important level to watch out for, because if broken, further downside pressure could persist. Resistance is currently near 1.158, where previous rallies have stalled. So despite the broader macro volatility, the pair is consolidating within this range, but continued dollar strength could keep downside risk elevated. Moving over to commodities, silver is currently caught between three major macro forces. On one side, geopolitical tension typically increases demand for precious metals as investors look for safe haven assets. But on the other hand, a stronger US dollar and rising treasury yields are creating headwinds for this precious metal. Recent market data shows silver falling towards $83 an ounce, extending the losses seen late last week. Reports have indicated that the decline has been driven largely by dollar strength and fading expectations for Federal Reserve rate cuts. The spike in oil is also complicating the current outlook. Higher energy prices increase the risk of persistent inflation, which may delay central bank easing cycles, and that also tends to support the dollar, while weighing on non-yielding assets like silver. Silver is also particularly sensitive to global economic growth expectations because industrial demand plays a major role in this metal's consumption. So concerns that rising energy prices could slow global growth are adding further pressure. Looking at the charts, typically silver remains extremely volatile after the extraordinary rally earlier this year. The metal is currently trading around the consolidation range around $83 an ounce, with support at that psychological $80 level where recent buying interest has appeared. Resistance is currently near $86 an ounce, followed by 96, which previously acted as a ceiling for the market. Momentum indicators suggest silver is now consolidating within a wide range, waiting for the next macro catalyst. Finishing things off today with equities, the Nasdaq 100 is entering the week under pressure as investors reassess global risk conditions. Recent reports show Nasdaq dropping sharply, with the index declining as oil surged above $100 a barrel. The broader concern is that rising energy prices could reignite inflation, slow economic growth, and delay interest rate cuts. That combination can create a difficult environment for technology stocks. Growth-orientated companies are typically more sensitive to higher interest rates because, well, future earnings are discounted more heavily in high-rate environments. Last week's market performance reflected this fragile sentiment. We saw the Dow Jones fall around 3%, the S&P declining around 2%, and Nasdaq dropped around 1.2%. Now investors are turning their attention to the upcoming economic data, including CPI and PCE inflation readings, which could provide further clues about the path of interest rates. Looking at the charts, the Nasdaq 100 is trading near 24,150, reflecting a corrective phase following recent declines. Key levels to watch at the moment: support is sitting around 23,900, with resistance near 24,300, followed by the 24,800, which is representing the upper boundary of the current range. Momentum indicators suggest that the index remains cautious rather than outright bearish, with traders now waiting for more clarity around inflation and geopolitical developments. As we are heading into this brand new trading day and trading week, three key catalysts that could shape today's trading session are: first things first, energy prices. With oil trading above $100 per barrel, this has become one of the most important macro drivers around currencies, commodities, and equities. So keep a close eye on this price. Secondly, geopolitical developments. The conflict involving Iran has now entered its second week, and key developments could quickly shift global risk sentiment. And lastly, interest rate expectations. Markets are closely monitoring how rising energy prices may influence the Federal Reserve's policy outlook, which will directly affect the dollar, precious metal, and equity valuations. So the big question for markets this week is, will energy prices simply create short-term volatility, or could this become the inflation shock that reshapes interest rates expectations once again? Because if oil stays above $100, markets may need to rethink the entire path of the current monetary policy. And that means this week's data releases, especially the inflation readings, could be absolutely critical. And with that, we wrap up your daily market brief. Brought to you by ATFX Africa, the broker that gives you an edge in today's markets. Head over to atfx.com and, well, go and experience the difference for yourself. Traders, until next time, stay sharp, stay focused, and trade smart.